Which covered call ETF is better, JEPI or JEPQ? I'll get into it in a second, but first, there are a few really important things you need to know about covered call ETFs. The first being they are not classified as dividend ETFs. So anytime I make a video saying here are 3 great dividend ETFs, the comments are loaded with people saying, what about JEPI? What about JEPQ? Why didn't you mention QYLD? They're great covered call ETFs, but they're not dividend ETFs. And while some covered call ETFs do a hybrid approach where they invest a portion of their money and they sell covered calls on another portion, not all of them do. So you can't expect all covered call ETFs to have similar returns to an S&P 500 index fund. Their objective is to give you some passive income, but that doesn't come without some risks that you need to know about as well. However, I'm not going to get into all of that right now because this is a video comparing JEPI to JEPQ. If you want to learn more about covered call ETFs, please do so by clicking on the playlist down below. And by the way, this channel is meant to teach you how to be self-sufficient investors, not my financial advice or my opinion, which then you can take as financial advice. So I know by saying I'm not giving you an answer, I'm setting myself to get comments like these. So with all of that said, let's go compare JEPI to JEPQ. Come on. Oh, wait, first, smash that follow. All right, thanks. This is a template that I have designed for you to compare two similar ETFs. And you can see here that I've already filled it out, JEPI versus JEPQ. So let's take a look. Now, the first thing you need to know is both of these funds are relatively new. So we don't have a lot of data on these funds and how they perform in a variety of different markets. You need to be aware of that. Both of these funds are around $50 per share. And you'll notice over the last 1 year, JEPI is up 3%, whereas JEPQ is up 22%. And we're going to get into why in a little bit. However, JEPI has only been around since 2020 and JEPQ has only been around since 2022. Both funds have billions in assets under management and they both offer pretty high dividends. You can see JEPI is around 8%, whereas JEPQ is a little bit higher than 9%. Now, they don't have any 5-year dividend growth because neither of these funds have been around all that long. And their expense ratios are identical. Now, there's one big thing that sets these two funds apart. Let's take a look. And you will notice right away under their holdings breakdown that JEPQ is 50% technology stocks and JEPI is 18.75. You'll also be able to see their top 10 holdings in both categories for JEPQ and for JEPI. And you'll notice that the total holdings for JEPI is 132 and for JEPQ it is 98. Now, there are some covered call ETFs out there that only sell covered calls. And there are some which do like a little bit of a hybrid approach where they hold some shares to invest in long term and they sell covered calls. So you get the benefit of both worlds. When the markets are going up, you get the benefit of that. When the covered call premiums are really high, you get the benefit of that. So when we look up JEPI under the JP Morgan website, we can hit over here on their fact sheet and look at their little summary here, which will tell you that they have a combination of selling options and investing in US large cap stocks. And then we can go back down and look at JEPQ's fact sheet. And we will see that JEPQ says the exact same thing, except that their focus is on the NASDAQ 100 instead of the S&P 500 for JEPI. And I know this is really going to bother some people. It bothered all these people, but I don't give you a clear answer because it's not my job to tell you what's right for yourself. You might want something a little bit higher growth, so you might go with something like JEPQ, or you might want something a little bit safer, like the S&P 500, in which case you might consider slightly smaller returns and slightly less growth, but a little bit more stability, and go with JEPQ. I can't answer that for you.